So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to the Daily Call. Today we're going to answer the question, is volatility a good measure of risk? We recently actually said in our covered calls paper when we were writing up the research that volatility is but one side of a two-sided coin. So there's returns, in our opinion, and then there's volatility. And those are the two sides of the coin that you should be aware of as a trader. So volatility is just one way to measure risk. It should not be the only way to measure risk. It should be looked at in conjunction with a bunch of other risk metrics like win rate, returns, Sharpe ratios, Sortino ratios, Colmer ratios, etc. It's another way to measure risk. But generally, even though something has high volatility, means that it just moves a lot, that's all it means. It means that it just moves a lot. As long as you're compensated for that movement, it should generally be acceptable. Now, if you're looking at two different investments, one has high volatility, one has low volatility, and they both have the same return, well, obviously, you're going to choose the one with lower volatility and the same return. Because just volatility in and of itself does not necessarily mean that something is good, bad, or indifferent. It's, again, another metric to use when measuring the risk and the return and the possible viability of an investment strategy. So is volatility a good measure of risk? It's definitely one we use. It's definitely one you should look at. I'm not saying by any stretch you should overlook volatility. It's one you should focus on, but it's not the end all be all. It should be looked at in conjunction with everything else. So hopefully this helps out. As always, if you guys have any questions, let us know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.